Good morning, everybody. It's Christopher from Serene Education with the Forex Majors update for the 2nd of April 2013. Okay, I hope you had a fantastic Easter weekend. I hope you had a fantastic time with family and friends. And now back to business. Okay, let's have a look and see what's happening on the weekly on the euro against US dollar. Last week, in particular, quite a negative one. We had price failing at the underside of 1300 and moving into that 12700, which happens to be the prior support and resistance level for this pair back in November of last year. And subsequently getting there, we've seen a pullback. And as of the start of the new week, you could see prices moved gently back to the upside. Close of last week, we saw price through Thursday and Friday heading back up towards that 128500 mark, which is now still under the actual institution moving average on our daily. That 1300 mark, just above price there, you can quite clearly see. And you can see price through most of March finding support above it, and then, well, through the first part of March finding support above it, and the latter part of March finding resistance. The overall trend for this at the moment now, intermediately, is being negative. The major trend has now been breached. You can quite clearly see since July, August of last year, we had swing highs, and then we had that break here through the latter part of February, and since then we've actually been falling. 1300 was a major support and resistance level. It clearly went through that, and the price has been hesitating, falling, but very hesitant to the downside. We are now at the underside of the institution. So as it stands now, if we can see price from maintaining but below that 12900 in particular, and the 1285 where it is now, there is lots of consolidation between these two areas. There we go. There's a 12900 and 1285. You can see a lot of consolidation on our 4 hour time frame. Here a lot of hesitation. Okay, so primarily as long as it stays below the institution moving average on any time frame, then we should see that negativity still playing out. You can see there's more red across the board here than blue. There is 1 or 2 areas of blue on our template telling us that the sentiment is very skittish. However, you'd be trading against the market trend, which is the negativity, so you'd be putting a lot of risk in your favor in these particular buying scenarios here. So sentiment is still looking negative intraday, so therefore we should still looking for the downside. I think if price gets back above that 1300, then we should be looking at a change in market sentiment long term, which would gauge for further buying opportunities. But until such time as price is trending above that, we should still be looking for that negative sentiment. One thing just to remember or to remind you, today we have a lot of unemployment figures for the European session. So we have the Spanish unemployment change figures at 9 a.m. GMT, which is not too far from where we are now. It's 7:45 in the morning GMT. Then we've got the Italian, so we've got Spanish manufacturing, which could be interesting. Italian manufacturing this morning. Then we also have the unemployment rate for the Eurozone to collectively, and they're expecting a slight positive upside on that, almost a 1% change in that. So it'll be quite interesting to see how that comes out. If it comes out less than their forecast, we could see Euro finding a bit of weakness today. So very, very important. Just there's a lot of unemployment figures coming out, or figures coming out today. So be aware of that. On to sterling. Let's have a look at that weekly chart frame. Okay, you can see the past couple of weeks, price moving or bouncing at that 1485. 15300 is our major support and resistance level that has been in place since 2010. You can see latter part of 2010 right through to currently, before we saw the breakout, support being found at 15300. The fact that we're actually trading below it is a negative signal altogether. We have seen price consolidating at 148,500, which happens to be a consolidative range through the what was that? The May, April, what's that? Yeah, the early parts of May 2010, in fact. And we've seen a nice bounce to the upside. However, still being capped by that 15300. See price moving into that 15300, and as long as it maintains below 15300, the sentiment is still looking very much negative indeed for this particular pair. So you can see our charts telling us everything, and our moving average are pretty much telling us we should be in a negative trend anyway. The fact that we're trading below the 15300 just tells us that sentiment is just looking really negative long term, because the fact that over the past 3 years we've had prices found a valid reason to actually find support at 15300. Near term, you can see they didn't find a reason, and sure enough, we're trading below it. So as long as it maintains below 15300, then our psychology should be that one of selling. We shouldn't be looking for any buying opportunities. On my daily, you can quite clearly see the bounce that we had at the early part of March at 148500, and price has been making its way up tentatively to the upside. A lot of indecision on the way up. Nonetheless, still heading towards that 15300. Near term being consolidative, a lot of spinning tops as we head into this very important underside of this major support and resistance level here in the shape of the 15300. You can see that we two parts of our template are telling us we should be looking for buying opportunities, but these buying opportunities are coming on very indecisive candles and at the underside of a major support and resistance level. So there again, don't take that at face value. Rather look for bullish engulfing candle, a nice bullish engulfing candle close above 15300. Then you got my attention. Until that happens, I'm still be looking for that negativity to play through on the intraday. So my 4 hour, there we go. You can see the intraday time frame, the institution moving average, pretty much above price as she fell. A lot more red, and now you can see a lot more blue. But that blue is still happening at the underside of a major support and resistance level. You might have been able to actually buy into this upside move intraday. However, you would have had to be very, very aggressive with your entries and taking profit, because as we still trade below the 15300, there's more likely for indecisiveness as we head into it. And you can see a lot of opportunities here where price actually failed, not even to get anywhere near 15300, but failing at 152,500, which is not a clear sign. So you can see on this particular time frame, we are seeing a very bearish engulfing candle with a shooting star, potential shooting star at potentially the same resistance level as we had prior. So that could be an interesting one to see this morning. You can see the intermediate trend as of the 27th swing highs, and you can see quite clearly now near term the last 4 hour playing out very negative indeed. However, our time frame is telling us we're looking for buying opportunities. All the moving averages, including that all important institution, are still below price. However, we are still capped by that 15300 long term. And as long as 15300 remains above price, it's always likely for price to continue to find resistance and for price to remain or to fall back to price support and resistance levels. So if this candle here can close very negative at 9 a.m. GMT this morning, this 4 hour, then we should be looking to the bottom as potential targets. You can see quite clearly here, a nice bearish engulfing candle after a lot of indecision previously. Here we have a shooting star, potential for a shooting star if we get a nice bearish engulfing candle here. Then we should be looking to these swings. Here roughly around the 115, 11800 mark, back towards the 50 period moving average. Get below that, then we should be heading back towards that institution moving average down at the 1506, 1507 mark. Onto the Swiss franc. Let's have a look at the US dollar Swiss franc. So what's been happening here again? Price still maintaining above that 940. I have mentioned as long as price stays above this price support and resistance level here at 940, we should look for price to continue to the upside. However, on the occasion, she did break recently and push higher. You can see last week in particular, not really finding momentum to break these prior highs. Okay, she's made all this attempt to get above it, and now she's just trading sideways. Very, very strange. Not really good. However, you can see the prior swing low, swing fixed window has been broken, and now we are trading higher than the 940. So we should be looking for price now to add more onto that. Pull back on the new week. So yesterday in particular, if you look at the daily, price moving lower. There we go. Not really good. You would like to see price actually finding support. Nice bullish engulfing candle here in the shape of this hammer on the institution. Price headed back up towards these current highs here at the 950, the prior 950, 955 mark. However, since reaching those areas, price has actually fallen back. So that's not really, really good. So there's not really much sentiment in favoring the upside at the moment, which is not what we really want, because the US dollar has been strengthening quite well against most of its cross pairs. And this one not really playing fiddle. So very nice bullish engulfing candle. However, not taking it on to the upside towards those higher levels that we mentioned last week, which is very, very almost a pity, because you can see we have all the right ingredients for that upside. The US market really, really bullish. And what's happening at the moment now is price is failing to actually continue that through. And subsequently, we've seen this bearish Rami, and prices moved lower. Indecision candles yesterday, also very indecisive. Price actually closing the lower bottom of that candle, showing the sentiment still dragging price to the downside. So as it stands at the moment now, potentially intraday we should be looking at 940 as that target again. I mean, we've been here on a couple of occasions, and we could very well be looking to be heading that same way again. Intraday, you can see the intermediate, the overall trend for the intraday has been one of upside. A lot of blue and 1 or 2 areas of red, but you'd be selling into the institution moving average, which is a no-no. And on the occasions when we did get those breakouts, we were trading into price support and resistance levels. So no trades to the downside. Hammers here, very, very juicy hammers, but price has just been consolidated, not really taking that momentum. Now that we're above the 940, you can quite clearly see here. Here's my 940 mark. I'll just make it a lot thicker so you guys can see it. There we go. As long as price maintains above 940, we should be looking for top side. And you can see near term, however, you can see that negative sentiment playing out on the past couple of days to the downside, reaching these highs at 955, which happened to be prior highs at 955, and subsequently failing. and moving lower. So as it stands at the moment now, on my 4-hour, institutions above price, which is negative, all my moving averages above price, which is also negative. So we should be heading towards, if not to this trend line here, but back towards that 940 for the foreseeable future. On to the US dollar Japanese yen. Last pair of the day. Let's have a look at the weekly. Interesting scenario. Okay, so price really moving higher. The US dollar gaining a lot of strength against its counterparts, as I mentioned, in the US dollar Swiss franc. And in doing so, particularly on the US dollar Japanese yen, really rallying to some major highs over the past couple of months. If I go to a monthly chart, you can see the all-time high here back in 2007 to the current low here at 76. Price bottomed out over 2011, 2012. We saw that sentiment growing through 2012 in particular. End of 2012, we saw August, September, October, a lot of buying power coming through, and in doing so, breaking price support and resistance levels, and in doing so, subsequently testing major support and resistance levels to the upside, including these February tracement areas. 23.6 was a major one here at the 87. Price consolidated into that area, broke above, and then we saw that massive rally through the the start of 2013 up towards that 38.2, which happened to be our 9400 mark. As you can see clearly on the weekly time frames, price hesitating as we head into 94. And if I go to my daily just to show you that hesitation, you can quite clearly see here. Through February, a lot of resistance at 94, which happens to be the 38.2 on our weekly monthly charts. Price pulled back towards the 23.6 February tracement of this particular trade here. And subsequently, since then, has not really managed to break any lower. Reattempting the 94, breaking it, and then consolidating. So we think, great, get above 94, not a problem. As long as it consolidates above 94, then we should be looking for top side. Okay, pull back. Guaranteed to happen on most breakouts of a major support and resistance level. That occurred. We saw the pullback. Fantastic. However, the bounce was very, very indecisive. The bounce not as clear cut, and subsequently because of that, not breaking the prior highs here at 96.50, and in doing so, we saw a nice bearish engulfing candle, which has now dragged price back towards the 94. However, when we got back to 94, now we'd like to see another bounce. Okay. Still, as long as we stayed above 94, it's good. However, it's gone sideways. A lot of indecision. And when you start seeing a failure, when we saw a breakout, and we saw a lot of indecision at a price support and resistance level, it smacks of negativity and in particular because of the fact that we just haven't seen that follow through once we saw the bounce. And what happened is, yep, you named it. Yesterday we had a bearish engulfing candle taking us back below 94, back below the 20 and the 50 period moving average on our daily. Not a really good sign because we've seen US dollar really doing a lot of work recently to get to these highs, and now she's failing. So we have 2 parts to our 4-part strategy, which is red, and it's still the sentiment's still looking positive at the moment now. However, if we continue to maintain this course below 94, we're going to see the sentiment starting to change red, and then we should be looking for negative signals. So as it stands at the moment now, personally, intraday, you should start seeing all that red across the board. So there, intraday, we should be looking at potentially back towards that 950, which is the 23.6 February tracement area, as our first target. So let's look at the 4-hour time frame. You can see that negativity, not really good. And playing through yesterday in particular, very, very negative. Below the institution, you can see there's more red on the top of my sentiment move, and you can see quite clearly that's playing through to the downside. So as it stands now, look for trades to the downside on the hourly. There we go, 9,300. As long as it stays below 93, we should see the pullback, the failure of the pullback. Then we should be looking for an entry to go further south and look for those target areas to the downside. And let's have a look back towards the 4-hour just to see if there's any places here. So yeah, consolidation as you see at 93. Get below 93, then you should be targeting at 9,200 to the downside. So on an hourly, wait for the pullback at the underside of 93. If it fails at the underside of 93, look for a bearish engulfing candle or shooting star or harami of some sort to give us that indication that price is now looking negative, and then we should be targeting that 92 to the downside for the foreseeable future. Okay guys, that's it for today. Please be aware of any fundamental news. We are going into a very, very, very important week because it's the first week of a new month, and that means we should have a non-farm payroll figure on Friday. So a lot of unemployment figures, a lot of interest rates announcements prior to that, Wednesday, Thursday in particular. I think we'll get a lot of interest rates announcements playing into that all-important non-farm payroll figure on Friday. So today, to start the day off, or the week off, because yesterday was a bank holiday, we are looking at Spanish unemployment figures, manufacturing PMI results for the Spanish government, the Italian PMI results. We have the sterling manufacturing PMI results, which are very important. We have net lending to individuals month-on-month figure for the US sterling market or the Great Britain. Unemployment rate for the Eurozone. That's going to be quite an important one. And this afternoon we have the factory order month-on-month figures. We're expecting a fantastic figure for the US market. If that plays through, then we could see the US dollar maintaining that upside. If not, then we should see a continuation to the downside for most of the European pairs, the US dollar pairs crosses, as we've seen recently. Okay, so a lot of news. Please factor it into your trading. Back it up with sound money management. Excuse me there. Caffeine hasn't kicked in, but very, very important. Okay, guys, very, very important to work out your money management, to play with that. I know the markets are very speculative. There's a lot more indecisive, a lot more itchy and scratchiness out there. However, you still got to apply really good money management. Okay, you might have a really fantastic strategy, but as I keep saying to everybody, if you don't back it up with sound money management, you don't have nothing. Okay, otherwise, keep it clean, keep it simple, and I'll see you first thing tomorrow morning. Until then, trade serenely.